All right, let's dive in. I'm really excited for many of you all. This is the first time to meet us and see us as GivingIQ. Our mission is really to be the trusted leader in non-cash giving, not just technology, but with enablement, the processing support, all the things that fundraisers need to be successful in this new era of fundraising. Our goal is to unlock 300 billion in appreciated assets. These are non-cash, typically considered more complex assets by making non-cash giving easy for donors, for financial advisors, and for fundraisers, gift processors, donor relations, finance, marketing, really everybody on the team. It takes a village to fundraise, and our mission is really to help you with the tools and the technology and the enablement support to make the most of securities, stocks, ETFs, mutual funds, donor advised funds, crypto, and qualified charitable distributions or IRA gifts. We're going to be covering each of these pretty thoroughly today. So hopefully from this, you've come out with a much higher level of comfort and confidence as it relates to your fundraising strategy and your efforts and your capabilities. So what to expect today, we're going to walk through each of these different ways to fundraise, the why, the what and the why, and then we're also going to talk about the how, and we're also going to share some tools and tactics with you and then have plenty of time for Q&A. So with this, let me go ahead and turn over to Kevin Kreamer, our VP Growth, who will, we did have a poll set up, but I think, oh, great, we can do it. So Kevin, let me turn it over to you. Kevin, are you there? I can't hear you.
Here we go. Sorry about that. I see people are responding, so they took the cue. Yeah, we're trying to get a sense of, your level of confidence when it comes to non-cash giving and your confidence in talking to folks about that. And we're seeing the results come in here. So we'll give that a few more moments before we jump in. And while we're doing that, just a little bit on me. I've been in and around nonprofit tech for a long time, specifically around fundraising solutions. So that's been about the last 20-something years of my career. So a little bit on me. So Steve, it looks like we've got about 70% of the folks in here. Confidence levels are sort of skewing across the board, but it seems to be an area where folks could certainly use some education, confidence, and so forth. And that's certainly what we're set out to do today. So I'm going to go ahead and end that poll and we'll show the results. Can you guys see that? You see the results there, Steve?
I don't, but
Okay.
I'm not a panelist or attendee.
Yeah, it looked like the majority of
Oh,
folks
yeah, I see now.
sort of fell below that sort of 6-7 line. So in any case, that sort of tracks with what we hear in the market as well. So let's talk a little bit about, before we get into some of the playbooks and the tools and the tactics, I think it's important to level set around just the fundraising landscape. These are things that I think probably most of the group on the call know, but over the last, gosh, how many years we've continued to hear the number of donors is shrinking, even though the dollars are going up. There's economic uncertainty, and we certainly have hit other things like federal funding cuts over the last couple of years as well. And Steve, if you can go forward, those are just things that we're dealing with. And it really translates into we need to diversify our fundraising strategy. So when we look at, let's look at the donor pool. I think from this perspective, the majority of donors are still individuals, right? That's the biggest part of the pie. But when we look at specifics around those individuals, where the wealth is held is actually in assets. And if we look at where the majority of fundraising initiatives go towards is the smallest bucket, which is cash. We're going to talk a little bit about a study that Dr. Russell James did. One thing that he found about that, there was a psychology of asking for cash and the fact that it's then compared to other things that I might spend cash on. So there's a marker on that. When we look at asking for money in assets, the comparison is much different, and the gift sizes may psychologically seem smaller. Some other things that he found in his study, and he went through over 1 million tax returns for organizations, and he found some markers around growth indicators. One of the biggest growth indicators that they found was whether or not the fundraising programs had non-cash giving in them. And if you had any non-cash fundraising in there, the growth rate was 50%. If it was just cash, it was at 11%. If specifically, if you had stock in there, it was actually higher. It was closer to 66%. And what that tells us is diversified fundraising programs grow at a much higher rate. I think those are really important components when we talk about sort of diversifying. So let's talk about stock in particular as we go through that. And one thing that and you can keep going on this. Yeah. So we touched on the fact that the majority of wealth is held in investments. But when we really start to break that down, thinking about how we talk about that, I think some of the things that I've heard in my conversations is like, hey, I'm not a financial advisor. I'm not a tax expert. I'm not sure how to explain those things. We're going to give you some tools, so don't worry about the sort of writing down notes, as Steve mentioned, but we do want to talk through an example. I think there's a couple of call outs here. When we look at this example as $10,000 gift on a $2,000 cost basis. The reality is this is when we talk about tax advantages, there's really two things. They avoid capital gains tax, and they also get the charitable distribution or deduction. And Steve always likes to say this is double dipping. And that's really the thing to take away. You get the capital gains tax and you get the charitable deduction. And that's really important. You don't have to know the specifics about the dollars. We're going to give you some tools to do that. But that's the big takeaway here. There's wealth tied up in investments, there's tax advantages to it. Those two things are the components to sort of think about. Yep. And then when we look at sort of just some insights and demographics on who holds securities. So 66% of Americans over 50 own securities. The majority of them are going to skew into older populations, but it's not isolated to them. Stock investing has become democratized with the onset of apps. Younger folks are investing. It's become a lot easier. But they are, typically Gen X or older and typically have college degrees. So if you think about looking through your house file, who might be there, this is a good indicator on that. But why do people not? Oh, yep, let's hit the 2025. Sorry, I had let's look at 2025 stats. So we have a lot of data. We have going on 7 years worth of data that we look at. We do a year-over-year view as well. Some of these are really key to understand. First and foremost, in 2025, the average gift size that came through our solutions for stock was $9,000. An interesting data point that 60% of the gifts that were initiated were through financial advisors. So that is an audience to know about. They are obviously working on behalf of their customers. 52% of giving came through previous donors. So retention rates are going to be high. What's interesting within those retained donors, 36% of those gave more to the tune of 55% more. So when we look at our repeat gifts, our overall average for repeat givers was $15,000. Party line here, larger gifts, higher retention. That's a compounding impact year over year. So good things to note there. I know with organizations that have been on with us for years have seen that compounding effect continue to grow. And, I always like to say there is a cost of doing nothing. Again, if we're thinking about diversifying our fundraising programs, this is a great way to do that. And Steve, I know you always like to comment on this one as well. Anything else you'd
Yeah,
add here?
I think this is probably one of the most important slides in the presentation because every organization is trying to figure out how to reverse this trend of relying on, fewer donors, bigger gifts. And a lot of organizations spend a lot of money trying to acquire new donors. And you guys have seen the retention rates nationally. I think it's around 16, 18% of first-time donors make subsequent gifts. So retention is really low overall. There's just so much competition for time and attention and the donor's money. You can grow your funding with your existing donor base. That's I think one of the key takeaways here. Just by migrating somebody, having a conversation with them, say, we really appreciate your cash gifts, but did you know there's other tax advantage ways to support us? Do you have a portfolio? Do you have crypto? Do you have a donor advised fund? if you're over 71 and do you have an IRA? If so, we'd love to talk to you about how you can save a lot more in taxes by sharing your assets with us versus your cash. You can keep your cash for your day-to-day expenses and share your wealth with us. And I think that alone, if you can learn, and that's what we're going to walk through today, it can really be transformational for your fundraising program. However,
Yep. Yeah. So the challenge is, it's a very small percent of donors that gift stock, and there's a couple of reasons for that. One, awareness, and which is one thing that we're set out to help solve, but lack of awareness amongst donors and investors. The process is really challenging. If you think about, what's expected in today's day and age, again, investors are doing a lot of their trading and so forth on apps on their phone. Yep, typical experience that we see in most cases is a little bit of a multi-click to get to a point where I can find information about donating stock, and then it's hey, call your broker or do something manual on that process. It has a lot of friction in there. It's time consuming, and it's time consuming for financial advisors as well. Again, that's a pretty important pool to think about. Challenges for the nonprofits. So thinking about back office, most organizations don't have a brokerage account. There is a perception that it is difficult. In a lot of cases, it is because that's what is offered to our donors. You don't always get information. There's not data transparency. It takes a long time to figure out who even gave donations. We've heard all of these stories along the way. And what that results in is typically a very reactive approach to this sort of channel. So those are just some of the challenges that we were set out to solve. And actually, it's a good transition, Steve, into sort of your personal experience and sort of why you started the company as well.
sure. Thanks, Kevin. I like to surface this slide because this is the process I had to go through almost 20 years ago, which is for many of you still the process that your donors go through today. There's a lot of manual steps to find out how the process works, get information from you, contact my broker, find out how do I initiate this transfer, fill out paperwork. Sometimes for the nonprofit that's asking because they want to know what I'm sending so they can reconcile it. Because again, my identity doesn't travel with the stock. Then my broker wants me to fill out paperwork. Then I have to figure out how to get it to them. And for most donors, it's just not worth the hassle. If it's a $50,000, $100,000 gift, they'll spend the time to do the work. If it's a $5,000 gift, it's just too much. It's just too much work. I think donors in general they're time starved. They expect everything to be easy, intuitive, digital, make it simple, make it easy for me. If you can make this a 2-minute process, I will do this all day long. If it's a 2-hour process, I just can't be bothered, and I'm going to share my assets with those that make it easy for me. So we're going to talk throughout the process about the donor experience. Put yourself in the shoes of a donor. I want to support you. I'd love to make a $2,500 stock gift, but I don't have hours to go through this process. And my advisor doesn't like doing all this work for a tiny little gift, compared to maybe other stock gifts you're giving. So this is kind of just to highlight what that donor experience is. If you really want to meet the donor where they are, make it easy for them to share their assets in a way that's most tax advantage for them. So that goes to donut stock. This is why we started the company. It was my own experience in 2020. Realized that the process was still a 20th century approach. It was the same way we had been doing stock gifts 30 years prior to that. A lot of paperwork, a lot of manual steps. So the first goal for us was to make it an easy donor experience for donors and for their financial advisors. We have an easy button, I see a lot of our customers here today. We have an easy button that literally the first gift takes 5 minutes to do it online. This is not a product demo. This is not really a sales pitch. It's just saying this is our approach to solving that problem of making an easy donor experience and doing it in such a way that invites them to do it again and again. Then the other part of it is really the end-to-end platform for you, the nonprofits, for fundraisers. There's a lot of manual tasks. There's a lot of people involved in every gift. If you think about who has to touch every stock gift, it's someone in development, generally someone in gift processing, finance, donor relations. If you're out there communicating, soliciting, your marketing team's involved. You may have 4 or 5 different stakeholders involved in the process of a single stock gift. And a lot of back and forth, a lot of time consumed. So by automating that and providing the transparency that you need to know whose stock this is, so we can be timely in our reconciliation, our acknowledgement, our stewardship. Those are really key components. And for most of you that we process your gifts, we actually run them through our 501(c)(3) Donate Stock Charitable, where the gift will be sold, reconciled, and send you the cash with all the donor's information. So we originally started that for our smallest customers, and that our biggest customers also wanted that same convenience because they don't like touching the stock either. But technology is not going to solve your problem. And this is why we're here today. Enablement, education, service, and support are absolutely paramount. And that's really what we pride ourselves on. We have a great solution, but at the end of the day, if you're not comfortable using the tools, if you're not able to figure out how to talk to your donors about other ways to support you, whether it's stock or DAFs or crypto or QCDs, you're not going to grow your program. And that's really our goal is by providing educational sessions. Jacque, when we get into the customer success side of it, we'll talk about our live workshops each week. But we also provide live support to donors, advisors, and nonprofits. We take responsibility for the success of every single gift, and no gift is too small. I just got back from a Shriners fundraising conference in Tampa, educating their fundraisers, and they had a $500 gift that came through that was followed by $1 million gift. The $500 gift was a test to see how the process worked. When that went smoothly, the donor made $1 million stock gift. It's an amazing success story, but it just goes to show every gift matters, and you can't let any fall through the cracks. So Kevin mentioned earlier about the tax benefits, and this is something I actually demoed this at the Shriners event, and I'd love to show you how this works because I think this really opens the eyes of donors and investors when they see what is possible here. So hopefully you guys can see this, but if I was to, let's say you bought 100 shares of Apple 10 years ago at let's say $25 a share, and this is one of the most widely held, commonly owned stocks. Let's say my income is less than $400,000, my tax rate's 35%, and let's say I live in California. This shows like for a $31,000 gift, my tax savings as a donor is $20,000. Let that sink in. Two-thirds of this gift is money saved out of my pocket. This is really eye-opening when you can share this with your donors. The capital gains tax, state and federal, I'm saving a 32% cumulative tax. I'm also getting $10,000 deduction on my $31,000 gift because my tax rate's 35%. So I've literally on my what was the original investment, a $2,500 gift. It's now worth $31,000 10 years later. This is not unusual. This is the norm, not the exception. If you guys have seen what's happened in stock markets the last 20 years, those who've been investing over the decades are sitting on immense wealth, incredible gains, and there's no other way for them to harvest their gains and reduce their portfolio concentration than to do it in a tax-free way other than donating it. So you have an amazing opportunity here to educate them. So by the way, we're going to share this with you, but we're also embedding that we're making this available as a marketing asset that will have your logo on it as a customer with a widget on your site. So imagine having on your stock gifting page or the section on your ways to give page, a widget to calculate your tax savings. When they see this, they're never going to go back to writing checks because it's financially irresponsible to write checks when I can save this much money just by sharing my gains with you. So happy to answer any questions you have about this afterwards. So let's get into DAFs. You have to have been living under a rock not to be hearing all the buzz about DAFs the last several years, and with good reason. I assume most of you know how DAFs work. If there's questions at the end, happy to explain it. But basically, I explained it to my mom as a charity savings account. You take a pre-tax deduction, you put your money into a donor advised fund, then you can advise. The advice part, you can recommend grants to charities that you want forever with that money that's sitting there. It continues to grow because it gets invested by your DAF administrator. Wonderful tool, and we've seen a tremendous amount of capital go into DAFs over the last several years. Today, the last report, it's kind of old data because unfortunately it just takes a while for them to show the latest, but there's about 325, 330 billion in DAF accounts sitting there that's been deducted in these savings accounts to be granted to charities like yours. The average balance is about 90,000, but the median is about 25. That's important to know too, because I think it's important to have realistic expectations. There's high concentration. There's a handful of DAF accounts that have millions, hundreds of millions, maybe $1 billion plus in their donor advised fund account. But the average everyday DAF account holder is about $25,000 balance. So keep that in mind and think about what they can give annually. The problems are the gap. More money is going into DAFs, that's the light blue bar, than is coming out of DAFs. And this is really what the industry has been focused on is how do we get more grants to come out of donor advised funds through educating donors by making it easy for them. So right now there's about a $25 billion gap. This gap, I worry when they come out with the 25 data is going to be dramatically higher. There's rumors that there's close to 500 billion sitting in DAF accounts right now. That means the last couple of years there's been probably more like in the 150 billion or maybe 75 billion, 100 billion going into them a year, more than what actually was gone in the past. So there's a probably a massive gap because I know the grants have not kept pace. The reasons are the following. One, payouts are not mandatory. As you probably know, a DAF can sit there forever. If a donor forgets about it, then it can sit there forever. If they pass away and don't assign a beneficiary, I'll pose a question to the audience. Guess what happens to that money? I'm not going to tell you the answer, but whoever can answer it in the chat, you'll get a gold star. But I will tell you at the end. It's sometimes not a great experience, especially if it's a small community foundation that's managing the DAF for the charity. Sometimes they don't have the best tools like Fidelity and Vanguard and Schwab have. There's a lack of transparency for you. Sometimes you don't know, you're not going to know when they made that gift until they actually that check comes to you and you're able to reconcile that gift, hopefully reconcile it. But the challenge with transparency is sometimes the donor's information is not in there. They'll say, here's a check for $5,000 from the SL Giving Fund. And your question is, well, who is that? I have no idea. You guys, hopefully you're shaking I'm sorry, nodding your heads. You've been through this process before, but it's still not perfect. And there's a lot of confusion about who the donor is from DAF grants. And then sometimes this is actually something that just blew me away. And I found out is donors actually select the wrong recipient all the time. If you've ever made a DAF grant, if you don't have an account with a DAF, open one with Fidelity or Schwab or Vanguard. You can open it with $100 balance. Just so you know that donor experience, I'd really encourage you to do that. When you go to make a grant and you search by name, you're going to get hundreds, if not thousands, of possible charities that match that name pretty closely, and then you have to try to figure out who is the right charity. Unfortunately, people get it wrong all the time, and they accidentally send a grant to the wrong nonprofit. And that creates, as you can imagine, a lot of hassle and frustration. So again, the goal is let's close this opportunity gap. Let's start. If we could level up where DAF grants are equal contributions, that would be an amazing improvement. And that's what I think the whole industry is working towards. Our attempt to do that is with our Easy DAF product. We launched this in Q4 of last year. So it's an easy button, kind of like stock, where we capture donor information, the amount of the grant, their DAF, the name of their giving fund, and their contact info. And you get that provided when they initiate that grant. We then redirect them into their DAF portal where they can execute that the way that Fidelity and Schwab, Vanguard want them to. We don't log into their accounts for them. We respect and honor, the DAF's security and privacy and legal requirements, and for that reason, they're very supportive of our approach. If you'd like to learn more about this, you can visit. We still have a lot of the content. We're still moving a lot of the content to our GivingIQ website, but the donatestock.com still has quite a bit of information on this.
And
Let's talk
Steve,
about, yeah.
yeah, we did get some responses. So I don't know if
Okay.
you just want to touch on the
Let me
what
see
happens if there's not a beneficiary or there was a
sure. Mark, it sits there pretty close. Sponsor's discretion. Yes, that's correct, Christy. It goes to the DAF, Luann. It actually goes to their charitable foundation. If you have $100,000 sitting in Fidelity Charitable and you pass away without a beneficiary or somebody that you've assigned to take over ownership or, the authority for the grant decisions, it goes to their charitable foundation. So one takeaway from this event today, this webinar, if you get a DAF grant from a donor, talk to them, have a conversation with them, and ask them, hey, have you assigned a beneficiary to your DAF? If something happens to you, we'd love to be, one of the beneficiaries or the beneficiary of your DAF. Here's the impact you could have. It could be a legacy gift at that point. Otherwise, it's just, it could end up never getting to charity. So, Agnes, we'll come back to your question at the end about putting pressure on the brokers. That's a different question altogether, but a good question. So anyway, remember the beneficiary asks to be part of that or the beneficiary. That can make a huge difference. So let's switch gears, talk about crypto. Both exciting and scary at the same time to a lot of nonprofits. Today, just some data points. It's not widely held. About 10% of U.S. households own some crypto. I will tell you, it's highly concentrated. About 90% of all crypto is owned by the top 1% wealthiest wallets. So it's not like widely distributed. Think like securities or IRAs where you have, hundreds of millions of people or tens of millions. There's a much smaller pool. However, millennials, this is one of the favored ways to invest and to digital asset investment and interest in that is very, very high. And by the way, these are the donors of the future. These are the great inheritors. These are the people that a decade from now, 2 decades from now, are going to be sitting on having inherited this great transfer of wealth, trillions and trillions of dollars. So it's very strategic in that you can engage millennials today by making it easy for them to donate crypto to your cause. But you can also find some really large gifts. You're not going to get a bunch of them, but you could get $1 million gift pretty easily. Talking to a community foundation, they received 3 gifts over 3 years of crypto. One was 1,000, one was 10,000, one was $1 million. So in the aggregate, it works out. You're going to find there's a few crypto whales out there. I say a few, I mean there's tens of thousands of people that have a lot of crypto that can give it, that can donate it to you. And again, making it easy for them, but at the same time, recognizing there's a lot of concerns around crypto. Their boards really struggle with this. You think about your gift acceptance policies. You think about concerns about anything that's illicit or the source of the donors or anonymity, and these things tend to scare nonprofits. So that lack of expertise, very few organizations or nonprofits have expertise in how to process crypto gifts. There's still a lot of concern. It is kind of complex. You can't just, receive crypto. You have to like get set up and KYC by a big platform like Coinbase or a Gemini or one of these crypto platforms if you want to set up your own wallet. It's a lot of work. It's a lot of administrative. And for a lot of nonprofits, it just doesn't make sense. Then there's some compliance issues. What's important to note is that crypto it's really not your problem, it's the donors. They just have to be aware it's treated like property. It's kind of like more like giving you art than giving you cash or securities. So there's just some additional filing that they have to do when they make gifts. Um, Alon, I see your question about dApps. We'll tackle that at the very end. I think Kevin has responded to it. So our solution to this is Easy Crypto. We launched this back at the very end of 25. We actually re-released our new version of it a couple weeks ago. It's really an easy, robust enterprise tool. We're very proud of it. It makes it easy for a donor to execute a crypto gift to you in minutes. Unlike stock, it doesn't take days to get through the financial system. The crypto will arrive within anywhere from 5 minutes to a couple hours after they initiate that crypto gift. So you're going to get really quick feedback on the success of that gift. In this case, you don't have to touch the crypto. In fact, you can't. We run all crypto gifts through Donate Start Charitable, our 501(c)(3). We'll have the donor, we'll give them an address to send the crypto to our crypto wallet. It's a dynamic wallet, so it's a one-time wallet. We receive the crypto from that donor that one time. It prevents any malfeasance going forward. And it's liquidated, it's converted to dollars, and then we send you the cash just like with stock. So you don't have to touch it. You don't have to change your gift acceptance policy. Let your board know we're not involved directly. We're receiving dollars, not crypto. But you obviously get all the donors' information as well. And by the way, to kind of preempt some questions, we use Coinbase Institutional. They do a lot of KYC, know your customer, and anti-money laundering screening of wallets against OFAC lists, sanctions lists, known addresses that are a list or known maybe under or suspicious. So you can rest assured that you don't have to worry about that. We also capture the information from the donor. It's part of our KYC for our own compliance. So you don't have to worry about anonymous donors sending you crypto. We'll tackle all these at the end. I don't really see any crypto gifts. I see, yes, let me ask Rachel a good question about the benefits of crypto. Um, just like stock, if you have appreciated crypto, so for example, like I bought Bitcoin back in 2017, Ethereum, some others, it's appreciated quite a bit since then. It's up probably, even though it's down right now, it's still up probably about 5x from where it was. Some are 10x still in terms of appreciation. If I sell that or if I spend it, So spending crypto is the same as selling it. I'm gonna have to pay a tax on that capital gain. If I donate it, I get to avoid the tax. I get to write off the donation, just like donating security in that regard. So qualified charitable distributions. This is, I think, probably one of the most exciting, promising areas right now. A little bit about QCDs. I'm not sure how familiar you are. I'm going to assume most are not super proficient when it comes to understanding QCDs, RMDs, AGI. There's a lot of acronyms here, so we'll try to simplify it for you. Back in terms of context, there's about 38 million retirees over 70. 70% of them, or 27 million Americans, have IRAs worth $13 trillion. Average IRA for these 27 million people is $500,000. When you turn 72, the government's going to start taxing that traditional IRA, and the average, what's called they're gonna make you distribute it, and then they're going to tax you on that distribution. So the RMD on average is about $20,000 that a retiree is going to recognize in income from their IRA, and they're going to get taxed on that. That's just a way to tax these IRAs that were after years and years, decades of pre-tax investing. The qualified charitable distribution is an amazing tool. It allows donors to make a donation from their IRA to a charity, and they can offset the RMD. So if I have a $20,000 distribution that I've got to take and pay tax on, I can make a $20,000 qualified charitable distribution from my IRA. It's not out of the checking account. It's got to come from the custodian, and it's going to not only offset my required minimum distribution, or the RMD. So now I'm not going to get taxed on my RMD, but it also reduces my adjusted gross income. If I'm a retiree with, let's say I have some Social Security, rental income, maybe some real estate, investment income, interest income, the RMD can actually reduce all of my, I'm sorry, the qualified charitable distribution can reduce my tax rate on all my income. So it's an amazing tool, and you can give a lot more than your RMD. You can actually donate, even if you have a $20,000 RMD, if you have, $1 million IRA, you can actually donate up to 111,000 from your IRA this year, and it's going to reduce your income by that much. So it's an amazing tool for seniors to protect their income, save taxes now by donating from their IRA versus waiting till end of life. There are some challenges. Very few donors know about, or sorry, retirees know about qualified charitable distributions. TIA and Vanguard say only 5 to 8% of retirees, IRA holders, even know what a QCD is. Fidelity said less than 25% of people who have $1 million IRAs or more know what a QCD is. So there's a big opportunity to educate your donors, and very few fundraisers are having these conversations. We hope you will be amongst the leaders in this new opportunity. But even if they do understand the benefits, it's generally not a very good experience. And it just takes it's a lot of effort. It's intimidating. My mom would never get through a QCD form. It's a really intimidating process. So, and there's also, again, just like DAF grants, sometimes you don't know who that donor actually was. It comes as a check from the custodian, and that information can be scarce. Huge opportunity. This is why it's so exciting for us that we're building a new product for this. There's about 90 billion in potential giving a year, of which only 6 billion is realized today. I walk through the math later. I don't want to take too much time on it, but just like securities, very few people that could be giving are giving, and this is a really amazing opportunity for nonprofits. As mentioned, we'll be launching our QCD product in this summer, simplifying the process, making it easy, just like we do for all the others. So watch this space and stay tuned. So stay tuned before I turn this over. It's a $300 billion opportunity, of which 200 billion is basically going unrealized this year and every year until we start leaning in. Unmatched tax benefits for the donors, larger gift, higher retention. It's really a win-win for everybody, and now's the time to take action. With this, let me turn over to Jacque, who will walk you through our playbook for strategic giving.
Fantastic. Thank you. Well, hello, I am Jacque. I work in the customer success department with GivingIQ. You've probably seen my name on emails throughout the year. If you join any of our live sessions, our strategy sessions, you've probably seen me there too. I hope you join if you haven't yet. Truly, my goal and our goal here is to help all of our nonprofit partners feel confident with non-cash giving, just really set you up for success. So today I want to talk a little bit about the how and our go-to market framework. Okay, we're going to keep it a little bit high level for sake of time today, but I think Steve mentioned this too, but we do offer strategy sessions twice weekly. They are live. There will be a link later in our slide deck. So please join that. We'll walk through all of these tasks in more detail. Okay. Thank you. So our go-to market strategy focuses on 3 phases: implement, introduce, and integrate. They each have a couple tasks for each phase. We're going to go ahead and just jump right into phase 1, which is implement. All right, so your first task that we'll walk you through more detail in strategy session is to create dedicated space on your website for each individual way to give that you offer. We suggest a dedicated page if it has to be space. The idea is that you need educational material, right? Make sure that your donors understand the benefits, the tax advantages of each of these ways to give. Just explain how easy it is for them to donate from their assets. Okay. We actually provide the content for you to use, so we'll make sure that we show you where that's at here shortly as well. Okay. Also on that page, you saw probably that we have our easy buttons. Let's talk a little bit about our easy buttons here. With our easy button technology, donors don't have to leave your website or those dedicated pages to make their gift. It's all about the donor experience. We need to make it easy so that they'll give again, and probably they'll give more the next time around. So the easy buttons here really offer an Amazon checkout or a PayPal-like experience. They're walked through making that gift beginning to end. They never leave your site. Truly easy for them to make the gift. It's a better donor experience. We see higher conversion rate by using the easy button process versus a more manual option that you may be providing currently. Also to note, the buttons are really easy to implement. We give you the code. We can help your web folks if they need help with that. Okay. All right. So next up in implement, you need to make your ways to give page optimized. Make it super simple, again, with the donor experience in mind. You probably offer a lot of wonderful ways to support your organization, but you have to find them easily. Our best practice is to use a layout like you see here with tiles, an icon, a short description, a link back to the dedicated page as we discussed earlier. You need to make sure that your ways to give are above the fold on the page. Have your largest opportunities at the top. Thinking again, donor experience, don't make them scroll through all of those ways to find what they're looking for. Okay. All right, next up, make sure your ways to give are prominently displayed on your site. As donors, we're kind of trained when we go to your website to look to that top corner for a donate button. But before they click there to make their $150 cash donation, we really need to make sure they're aware that there are other more beneficial ways to give. Best practice, as Steve's pointing out, best practice is to add a primary navigation option called specifically ways to give and place it directly next to your donate button or as close as you can get it there. We're looking at the World Central Kitchen website. When they moved their ways to give option right next to donate, they really did see an increase traffic to those pages and non-cash gifts. Also, make sure you're mentioning ways to give in other places on your homepage. Put it in the footer on your website, and honestly, anywhere that you have a call to action to donate, you should also have a link to your other ways to give. Keep it prominent. Okay. Finally, let's think about your donation form. Where on your form can you inform and remind donors that there might be other more tax-advantaged ways to give? The 3 examples that we see on the slide here, these are forms provided by a couple of our partners that we have integrations and programs with. But think about your form. How's it laid out? Do you have content area? Where can you add a link or some type of a call out on there for those other ways to give? Just got to keep it in front of them. Okay. Let's move on to phase 2. Introduce. Before we introduce to our donors, we want to talk about introducing this internally to your team, to your board of directors. Truly, we encourage you to take the time to educate your team on the why, right? And part of the how before you roll out any new options to your donors. Really make sure they understand the importance of diversifying. Why are we looking at additional streams and ways to give? The benefits of non-cash giving to your donors, even a little education there is good. Make sure they know how easy it is for donors, advisors, and fundraisers. Make sure they also know how to find and use our guides. We have all of these wonderful kits and guides, and I think Steve is going to actually walk you through a few of those right now, but making sure that they know how to access these would be crucial.
Yeah, thanks, Jackie. Real quickly, I'm just going to skim through what these are. These are going to be, you're going to get links to these as a follow-up from the webinar today. This is the guide. This is the what and the why, and it's what are the challenges with each of these. Our goal, and we'll be expanding this over time, but really to provide some really clear insights into all the different ways, the primary ways that we think of non-cash giving in terms of securities, DApps, crypto, qualified charitable distributions. Our partners with cars, we include them in here, vehicles, real estate, as well as some best practices and key takeaways. There's a lot of great content in here. It's a great primer for your team. Every fundraiser should be reading this to really get comfortable and understand what the opportunities are. And then what are some of the challenges? Why are stock gifts larger? What are some of the problems? Why has it been underutilized? We do this for every one of these. Talk about the opportunities, why it's important, what are the challenges, what are some of the solutions, how to crypto, qualified charitable distributions, etc. Again, this is going to be available to you. This is just part of our mandate is educating fundraisers. So you'll have a lot of good content here that you can read and share with your team as well. We also have our toolkit. The toolkit is really the content that you will use to engage your donors. So we have the benefits, non-cash giving, talking points for donors, FAQs, email templates, social media. We're updating actually Revenant right now with new website content. But here's 5 different ways to educate or to introduce this to your donors. Pick whichever one works best for you and put it in your words, your style, your tone. But we're giving you really the content you need, whether it's a meeting with a donor or an email, however you're engaging, or a newsletter. Talk about the benefits of donating assets instead of cash and different types. Talk about some of them have little nuance difference between securities, crypto, QCDs, etc. Talk about how it aligns with their values. Talk about how it can help them solve problems like managing their portfolio, reducing their requirement minimum distribution tax, avoiding capital gains tax. There's a lot of ways that you can talk to them about how this is such a more opportune way for them to support your cause. FAQs, what are the benefits, guidelines, what's the process? We have this for each of these. All these things that you probably get questions from time to time, which may have held you back from having conversations. We've got everything in here for you. If there's something you need that's not in here, let us know. We'll update this. This is a work in progress that is constantly being tweaked and tuned and updated. So DAFs, QCDs, all this. Good question about Jacob, about tax advice. We actually say quite a bit in here. Let's see here. We've got the messaging in here. We explained we're not tax advisors, you're not tax advisors, and you always want to put that in there. Let me find in the FAQs here. Remember, we're not financial advisors. We always recommend talking to a consultant, a tax expert, financial advisor. Generally speaking, you're going to introduce new ways for them to give. They're probably going to go talk to a tax expert, a CPA, a financial advisor to verify this. So just again, whether it's written or in conversations, those disclaimers can definitely be helpful. Jacob, thank you for surfacing that. Great call out. Okay, I'm going to turn it back to Jacque.
Yeah, that was perfect segue because next it's time to introduce all of your new ways to give to your donors. So Steve showed where to find a lot of the content for these options, and truly really just want to educate your donors on the benefits of donating assets versus cash, promote how easy it is for them to make tax advantage gifts online, but use all channels. How are you marketing? How are you communicating with your donors already? And what aren't you doing? Meetings, presentations, press releases. Do you do direct mail? I see a little bit of both sides of that. Email, social media, radio, anything you're doing, collateral, signage, you can have QR codes, right? Think about all of the ways that you can be communicating. There should be something in front of them there all the time. So the pre-written content is there. We'll make sure you have a link to access that as well. And finally, phase 3 is integrate. Unfortunately, this is not just a one and done introduction and education event for your donors. We have to keep reminding them all throughout the year. Think about how you can integrate just the non-cash ideas and language into everything that you're sending out or everything that you're publishing. Even if it's simple, one line call to action, right? In the bottom of every newsletter or in every email in your signature, keep it in front of them all year round. With that in mind, think outside of just communication. How can you use your non-cash giving, just like cash, for events and fundraisers? You can use securities and crypto for pledges, sponsorships, tickets, tables, auctions. I've seen some really cool examples of auctions. Certainly with DAF and QCDs, there are a few more limitations in that regard, but you can still use them for paddle raises. We love helping cultivate ideas. So if you're kind of jotting down some notes and you're thinking, how can I use this for a fundraiser or an event that you maybe have annually, reach out to us. We would love to help.
And one thing to call out on the event side, I think we all sort of come back to awareness is a big thing. So, putting out some education and awareness that those non-cash options are available to participate in the event before the event happens is really key element to that for sure.
Yeah. For sure. And then finally here, I can't encourage you enough to take a look at our resource center. Steve has touched on a few of these things throughout the presentation. We're passionate about enablement. We're not just giving you a tool and saying, here you go. We want to help you be successful. We want to help you build the content out. There are so many great resources in here. There are introduction videos, both that you can use internally, but also donor-facing introduction videos. The guides, playbooks, toolkits, everything's in there. The link that's in there will take you to all of that. As a registered nonprofit, as a customer partnered already with GivingIQ, you do have a little bit more of a robust customer resource portal. During our strategy session, our live sessions, we actually walk you through some of the marketing assets that you have when you log into your portal. So there are some that you have access to, even if you're not registered, that you can take a look through that Steve has shared. But there are some other things that we're very excited to show you once you sign up and once you join one of our strategy sessions. Okay. Email templates is, I think that you touched on that, but also in there as well. Okay. And kind of tying into there, one of the things that we've touched on is our live sessions, but what's next? If you are not registered, if you're brand new to GivingIQ, please sign up for one of our live demo Q&A sessions. These are typically Monday, Wednesday, centrally timed there, so hopefully it works for everybody. But join. We walk you through the product, the donor experience. You can ask live questions to our staff. The register link is there. There's no cost or commitment to sign up, right? And maybe Steve has some more to talk about there. I just wanted to talk about those live sessions. The strategy session, I can't encourage that enough. If you are signing up, if you're already registered with us, maybe you've been with us for years and just haven't attended one recently, please do. Sign up typically Tuesday, Thursday, noon Central. We go through all of that go-to-market strategy in much greater detail. We can also take a look at your website together in that session to make recommendations and answer questions. Okay, we'd love to have you join us. Steve, anything there to add as far as our next steps?
No, I think you nailed it. I think, depending on where you are in the process, we're here to help and support your fundraising efforts. And you got to do a little work, but we'll help you. We'll take the lion's share of it and do it for you. So please reach out. I think that's actually we're trying to do one more poll question. I don't know if it's queued up and able to do it, but our goal was like to ask you the question again, what's your level of confidence, and see if we get a lift over, from the very beginning. I'm not sure. We had a discovery issue at the end. I'm not sure if it'll work. This is our way also of knowing, are you learning anything? This is helpful. Your feedback is super helpful to us to understand to what extent this is addressing your needs for more education. So the poll's up. If you guys could quickly answer, hopefully, again, I'm not trying to influence your system, but my hope is we see a lift. Yeah. Hopefully.
Steve, one thing, and I know we've got a couple of questions in the
Sure.
QA as well. But one thing I think we'd be remiss to mention, at least with stock gifts, Q4 is a major window for stock gifts. Half of all the stock gifts that we get come in Q4, which means this is an ideal time for everybody to get sort of the house in order, do the things to get in front of that window, because there's an opportunity in 2026 to get ahead of that. And so we appreciate everybody attending because this is a great first step on that piece as well. So Yeah, and I think we had some questions coming in the Q&A, Steve. I don't know if we want to.
Yeah, I was just answering the one about mutual funds. So when we say stocks, we mean stocks, ETFs, mutual funds, bonds, all of those any registered security goes through Donate Stock.
Yeah, great question.
Peggy, thanks for the comment there. We appreciate that. Latanya, is there additional registration for Bitcoin? No, actually, thanks for asking this question. We're still kind of we went to market pretty quick with the new brand, so we want to make it really clear. Once you've registered with us for stock, you get everything. There's no incremental upfront fee, no fixed fee. As you guys know, I think one of the things we've always pride ourselves is make pricing really flexible and easy for you. So, and we're 100% aligned. Like we only make money if you make money. So we're trying to help you with a 0% zero fixed fee and transaction fees that start for stock and for crypto or securities and crypto, 3.9%. It goes down as you scale up. So that's the highest you'll pay. And also, by the way, if you're not aware, we also cap the fees, or not cap them, we reduce them at $100,000 gifts and above. It's only 1%. No one else does that. If you get a $200,000 gift, the fee is going to be what? $4,900, 2.5%. That's less than what you're paying for credit cards. And they do not tier their fees down based on larger transactions. So, and then for just for DAF, Easy DAF, we didn't mention this. We only charge 1.5% for DAF grants. We view that as really value add. We want to make it easy to get people to initiate those gifts and encourage you to make that part of your overall strategy. But again, I think market rates on that is around 3% is what others are charging for it. All right. So cool. Thanks for the results. I guess we can share them now. I don't have the actuals before it, but I'm hoping this is higher than
It's
what we saw
skewed.
before.
It's skewed. My official eyesight says it's skewed.
Yay.
Sort of ticked
Fantastic.
up, which is good. Hopefully, this people have some takeaways from the session for sure.
Awesome. I'll stop sharing and we can answer any other questions that you guys might have here. Okay. Anything else? Let's see. Agnes, there's a lot of people interested in non-cash giving right now. I'm looking at your note about emails from competitors. Let me say if I can say one thing about what, we are not just trying to solve the non-cash giving dilemma for a lot of charities, making them confident, comfortable with all the enablement, the training, the content, everything you need, the playbooks to engage your donors, a great donor experience, a commitment to their success. Every transaction, again, matters very much. But also to solve vendor fatigue. Nonprofits have 10, 15 different vendors, different portals you have to log into today between, if you think about someone for stocks, someone for crypto, someone else for DAF, someone else for plan giving, your CRM, your corporate matching, your donor wealth screening. There's an ad nauseum list of vendors that you have to work with today. And the one common thread of most nonprofits is limited staff, overwhelmed, and under-resourced. So part of our mission is not just bringing world-class, best-in-class tools to bear for you, but also to make it all part of one integrated solution. So one portal, one team, one plan. We're also not out there advocating you just have to go out and blast your entire donor base about DApps or crypto or securities or QCDs. We're talking about holistically, bigger picture, strategically. Talk to them about ways to give. Have conversations with them or an email. Do you have a portfolio? Do you have crypto? Do you have a donor advised fund? Do you have an IRA? If so, these are all really, tax advantage ways, and we can make that easy for you to give us those ways. Would you like to learn more? We want to help you think more strategically as a fundraiser and act more holistically when you're talking about building relationships, lasting relationships with your donors. If you can get them to donate their assets instead of cash, you have occupied a new space in their mind that others are not getting. Where donors think I give my stock to Shriners or World Central Kitchen. I give cash to everyone else, and I don't even remember who I gave cash to last year. That's why retention is so low and turnover is so high. So if you can build those longer term relationships, getting them to invest in your mission, sharing their gains with you, aligning their philanthropic and financial objectives, it sets you up for such much longer term success, just like the Russell James studies have proven. And we're here. That's our entire mission. That's why we exist, is to help you do that. So let's see if there's any other questions.
Yeah, a couple of good questions. One had a question about the toolkit, which we'll send out links to the
Yep.
resources for that. But there's a question about is there a backend for nonprofits or a dashboard to keep up with all the channels and so forth?
Absolutely. Yeah.
Great question.
Go ahead, Kevin. You can answer
The answer is yes.
it.
Yeah, we talk about full transparency in terms of dashboard. Both the donor will have a dashboard so they can see their transactions and sort of where they are in state. Nonprofits will have a dashboard to all of their transactions, and that would include all of the different channels. So stock,
Yeah.
crypto.
The donor data, all information, details of each gift. We have a lot of CRM integrations as well. So you can populate that data into your giving platform and into your CRM. Again, trying to remove friction and increase efficiency for you.
And see the visibility, and that's a timeliness factor. When we hear about the
Yeah.
delay, we didn't even know something was coming in, and you'll see that once that's
Yeah.
initiated.
You
So,
get advanced notice.
um,
Peggy had a question about incorporating a page with DAF and crypto button. We think like if a donor's on a DAF page, you don't want to confuse them with crypto or stock, you want them to give a DAF. If they're on your stock page, you want them to make the stock gift. So we have individual buttons. We've chosen that consciously. Friction reduces conversion rates. As you guys know, the giving platforms right now are maniacal about streamlining, simplifying, removing anything, any superfluous information to make it as easy to keep that donor focused on completing that transaction. So we've taken an approach that we have a different button for each way to give, but they all flow back to your portal and your dashboard. So you have a holistic view, and the donor has a consistent experience because a lot of donors who give crypto also give stock, probably also have a DAF. So we want to also give a consistent donor experience, but with a very focused, easy way to complete that transaction. Do we sync with Bloomerang? We do not yet. If you're a Bloomerang customer, you have to advocate.
the export
They
import.
have, we've been talking to them for years. No one speaks louder than their customers. So the more people, if you're with QGive or Bloomerang, or I think they just acquired someone else, please advocate. Say we really would love for you to integrate with GivingIQ. That way we get all these other ways to give, and it's one portal. If it all comes into one place, it's gonna make your life easier, and we'll never leave you. So you can advocate much better than we can. Oh, Peggy, your question was your current one doesn't incorporate your button. There's a few. You may not be able to put our, this is a great question, Peggy. I'm glad you brought this up. You may not be able to put our buttons on your donation form. Like if you're on a hosted form by a third party, whether it's a Bloomerang, GoFundMe Pro, a Fundraise Up. We actually are in a couple forms like Fundraise. You can put our button, you can surface that. Blackbaud Razor's Edge, you can surface our button in your donation form there. Most cases, though, which that's what we talked about, Jackie was referencing putting a note at the top of that form before they make that $100 gift, redirect them to give to learn more about gifting assets. And that's where you would have a dedicated page in your either a section on your ways to give page with that's where you put the buttons and the educational content, or better, a dedicated page that you can then drive your donors to when you send them ways to give with links to those each of those different modalities. Okay, I think we're at time. We're happy if there's any other questions, we'll stick around for a second. And happy to chat. Joni asked about Network for Good, which I believe is part of every.org, if I'm not mistaken. Or are they Bonterra? No, I get them all confused. They're Bonterra. We know them. Again, same with Bloomerang. We've had conversations, but they have to prioritize the integrations. We have API connections. We have multiple API integrations. We are connecting to GoFundMe Pro, Blackbaud, Donor Perfect, Fundraise. Whom else am I thinking about or missing right now? Better Unite, Uncommon Giving, and we're growing that list. But again, if you have needs, we're happy to support, but we really need them to put it in their product roadmap. All right. We really appreciate your feedback and input and look forward to supporting all of your fundraising efforts. So with that, stay tuned for the follow-up email. It's going to have all these links in it. Please share it with your colleagues. If you have other nonprofits you work with, it takes a village. Let's all do this together. Please feel free to share all this content with your colleagues, either inside or outside your organization. And with that, we'll let you guys run. Thanks again, and God bless.